In recent months, Tesla has found itself embroiled in a multifaceted crisis that has sent shockwaves through both the financial markets and the global automotive industry. Once heralded as the pioneer of the electric vehicle revolution, the company is now facing a severe downturn marked by a dramatic 53% plunge in stock value and a significant erosion of market share, particularly in Europe. The convergence of adverse trade policies, notably those instigated by President Trump's tariffs, and a series of contentious political maneuvers by CEO Elon Musk has left investors and consumers questioning the stability of the once revolutionary brand. The initial spark for this cascade of events can be traced to the imposition of tariffs that have effectively raised Tesla's production and supply costs. With the Trump administration's aggressive trade measures, the company has not only seen its manufacturing expenses swell but has also encountered a direct challenge in its export strategies. These tariffs, which were initially intended to protect American industries, have inadvertently placed Tesla in a precarious position by disrupting its global supply chain and increasing operational costs in key markets such as Europe, Canada, and China. The combination of these external pressures has fostered an environment of uncertainty, where the traditional advantages that Tesla once enjoyed are now being rapidly eroded. Compounding the financial impact of these tariffs are the political controversies surrounding Elon Musk. His high-profile statements and social media outbursts have not only attracted intense scrutiny from European political leaders but have also polarized consumer sentiment. In Europe, where environmental and social responsibility are highly valued, Musk's outspoken political positions have cast a long shadow over the brand's reputation. As consumers begin to question the alignment of Tesla's image with their own values, a significant downturn in sales has followed. In January alone, figures revealed a staggering 45% decline in Tesla car sales across Europe, while in Germany, the continent's largest automotive market, sales have plummeted by as much as 70%. Such numbers signal a deeper, more systemic challenge that goes beyond the immediate financial repercussions of trade policies. The stock market's response to these developments has been swift and severe. With Tesla shares recording a historic collapse, a 53% drop since the beginning of the year and a 7% loss in a single day, investors are increasingly wary of the company's future. High-profile financial institutions have reacted to these losses with caution. For instance, Royal Bank of Canada has revised its target price downward, reflecting growing concerns about Tesla's competitive position amid a rapidly evolving global landscape. The precipitous fall in market value, which saw Tesla's valuation shrink from a formidable $770 billion to $635 billion, underscores the magnitude of the crisis. It is a stark reminder that the market has begun to factor in not only the immediate operational challenges but also the broader implications of Tesla's strategic direction or lack thereof. At the heart of this turmoil is the intertwining of Tesla's corporate strategy with Elon Musk's personal brand. Musk's political stances and his frequent, sometimes controversial, remarks on social media have created a situation where his personal actions directly affect the company's market performance. His public disputes with European leaders and the broader political backlash have contributed significantly to the deteriorating consumer confidence in the brand. Investors, once enamored by the vision of a technologically disruptive company, now find themselves contending with a scenario where political statements are seen as a liability rather than an asset. Such a paradigm shift has not only rattled the financial community but has also had a tangible impact on Tesla's ability to sustain its growth in critical markets. The competitive landscape in both Europe and China further exacerbates Tesla's challenges. Local manufacturers are now capitalizing on the disruptions caused by tariffs and the company's shifting brand image. In Europe, legacy automotive giants such as Volkswagen, Renault, Stellantis, and Kia have not only bolstered their electric vehicle offerings but have also leveraged strong domestic support and government incentives to capture market share. Similarly, Chinese manufacturers are ramping up their production and aggressively expanding into international markets, placing additional pressure on Tesla. These companies benefit from localized production advantages, including lower logistical costs and favorable regulatory conditions, making their vehicles more attractive to cost-conscious consumers. As a result, Tesla is increasingly finding itself squeezed by a convergence of competitive forces that threaten its once dominant position in the electric vehicle market. The concerns of investors have been further validated by remarks from key government figures. The U.S. Commerce Secretary's recent statement, cautioning that Tesla stock is risky due to the intertwining of Musk's political maneuvers with the company's business operations, has only added to the mounting skepticism. This comment, perceived by many as an official warning, has fueled a broader narrative that Tesla's current predicament is not a transient anomaly but a symptom of deeper strategic missteps. The rapid loss of market capitalization, exceeding $70 billion in just a few days, has underscored the fragility of investor confidence. Such official scrutiny, coupled with relentless market pressures, paints a picture of a company at a critical juncture, where the margin for error has become increasingly narrow. Looking ahead, the future of Tesla remains shrouded in uncertainty. On one hand, there is hope that the company might engineer a turnaround by recalibrating its strategy. Proposals to introduce new battery technologies into mass production, the launch of highly anticipated models like the Cybertruck, and potential shifts in production focus toward more promising markets such as Asia could provide the necessary impetus for recovery. On the other hand, the persistent barrage of challenges, including ongoing tariff disputes, relentless political controversies, and the aggressive expansion of rival brands, suggests that the road to recovery may be steep and fraught with additional setbacks. The question that now looms large is whether Tesla can transcend this period of intense scrutiny and re-establish itself as the leader of the electric vehicle revolution. The company's ability to adapt will hinge on its capacity to address both the internal operational issues and the external competitive pressures. Strategic maneuvers, such as realigning production capacities, streamlining supply chains, and possibly curbing the personal political interventions of its CEO, could play a pivotal role in restoring investor confidence. However, these steps must be executed swiftly and decisively, as every day of inaction further solidifies the narrative of a company in decline. In conclusion, the current crisis facing Tesla is emblematic of a broader transformation within the global automotive industry, a shift driven by complex trade dynamics, evolving consumer values, and an increasingly competitive market landscape. Tesla's precipitous stock decline and shrinking market share, particularly in Europe, serve as a stark reminder that even industry pioneers are not immune to the disruptive forces of modern geopolitics and economic competition. The interplay of Trump's tariffs, Elon Musk's controversial political statements, and the rise of formidable competitors has collectively created a perfect storm that challenges Tesla's long-held image as a technological innovator. The coming months will be critical in determining whether Tesla can navigate these turbulent waters and emerge with a renewed sense of purpose and profitability, or whether this period of intense pressure will mark the beginning of a prolonged crisis for the company. For now, the data paints a sobering picture, a narrative in which the allure of innovation is overshadowed by the relentless realities of global market dynamics and political interference. As Tesla confronts these multifaceted challenges, the world watches closely, weighing the possibility that the golden era of its pioneering spirit may soon give way to a period of significant restructuring and transformation. Ultimately, the future of Tesla will depend on its ability to balance visionary innovation with pragmatic, market-driven strategies. Whether it can regain the trust of its consumers and investors remains to be seen, but one thing is clear: the challenges ahead are as formidable as they are complex, demanding a level of strategic agility that has rarely been required in the company's storied history.